Hi guys! Welcome back to my YouTube channel, and for today's video, I'm going to discuss about the fundamentals of taxation, wherein I'm going to tackle about the nature, the purpose, the limitations, the canons, the basis of taxation, and most importantly, how to avoid taxation. So I think that would be the content of my video. So we're gonna dig deeper into this discussion. And let's get started. And now let's start discussing the fundamentals of taxation. First, we have nature of taxation. Taxation is a state power exercised through the country's legislative body. So when we speak of legislative body, these are the persons who makes or amends or repeal laws, or shall we say they are the lawmakers. Next is the principle of taxation states that taxes are collected to support the government in its expenses and services for public welfare. So the taxation principles, these are the guidelines that governs an entity and used when devising a system of taxation. So when we speak of system of taxation, this should be spread across a broadest possible population so that no one person or entity can be taxed excessively. Next is we have reciprocal duties of protection and support between the state and its citizens or inhabitants. So in return for his contribution or this contribution, the taxpayer received benefits and protection from the government. So this is what we call the benefits received principles. The Constitution also states that revenues through taxation must only be used for government operations and for public welfare. Actually, the purpose of taxation consists of two. So we have the primary and secondary purposes. So when we speak of primary purposes, this is to provide funds or property with which to promote the general welfare of its citizens and enable it to finance its multifarious activities. Another thing also is to raise revenues from all possible sources just to support government expenditures and services and to promote the general well-being and protection of its citizens. And the secondary purposes is to strengthen anemic enterprises, so such as taxes safeguard newly opened industries to pioneering and new industries and other enterprises. So taxes also shield domestic producers by levying a much higher custom duties on imported goods. Now let's go on to the canons of taxation. So this refers to the basic principles of a sound tax system which identifies the following. So we have the fiscal adequacy, administrative feasibility, and theoretical justice. So we have first is fiscal adequacy. So taxes collected by the Bureau of International Revenue, or shall we say the BIR, they must be sufficient enough to fund the necessary government expenditures and basic services in a given fiscal year. So revenues must be capable of adjusting to variations in public expenditures. So in simple words, when we speak of fiscal adequacy, these are the sources of revenue that must be sufficient in order to meet the government expenditures and other public needs. Second is the administrative feasibility. Payment of taxes must be taxpayer friendly. So it means that the tax laws and regulation, it must be capable of being effectively enforced with the least inconvenience to the taxpayers. Okay, so the last canon of taxation, we have theoretical justice, which means that the tax burden should be proportionate to the taxpayer's ability to pay. This is the so-called ability to pay principle, wherein it is a principle that states that the amount of tax of an individual pay should be dependent on the level of the burden. Why? It's because the tax will create relative to wealth of the individuals. And now let's proceed to the basis of taxation. First, the Constitution, the fundamental law of the land. Second, statutes. laws passed by the Congress or presidential decrees. Third is Bureau of International Revenue or BIR rules and regulations. Fourth is judicial decisions on tax cases by the Supreme Court. Fifth is provincial, city, and municipality ordinances. Sixth is observance of international agreements, and lastly is administrative rulings and opinions. So this basis of taxation literally talks about, or shall we say, it is the existence of the government theory. So wherein it cannot continue without the means to pay its expenses, and that for this means it has a right to compel all its citizens and property within its limits to contribute. And now let's proceed to the objects of taxation. First, individuals who earn a considerable amount of income as a worker or as a businessman in partnerships or corporations, including those who inherited a property or given a gift or donation of a considerable value. Second is tangible and intangible properties, whether personal properties or movable properties that can be moved or relocated, or real properties or immovable properties. And lastly is the third one, transactions, consumption interests, imports and exports, and privileges. So these are the objectives of taxation. So which means the objectives of taxation is to make savings more dynamic and promote capital formation. So in underdeveloped countries, the savings can be easily directed towards production and capital formation through the assistance of taxation. And now let's have situs of taxation. Situs is a Latin term for place or location that refers to the place where taxes are to be paid. So there are four situs of taxation. First is we have income tax. Income tax is paid either in the place where the income is earned or the place of residence of the taxpayer. Second is real property tax. This is paid where the property is situated. Third is personal property tax. Taxes on intangible properties are paid in the place where the property is located, similar to real property tax. So the situs of taxation of intangible properties is the owner's domicile. So the domicile means that it is relevant to individuals' personal law that includes the law that could govern a person's status and their property. So last or the fourth one is we have the business and occupation taxes. So this is paid in the place where the business or occupation is located. Since we're done talking about the situs of taxation, taxation also has its limitations. So the limitations of taxation categorized into two: inherent limitations and constitution limitations. So when we speak of inherent limitation, these are rooted in the nature of taxation itself. So it is also categorized into five. So we have here first, the tax revenues must only be used for public purpose. Second, there should be proper delegation of legislative power to tax. Third, government entities are exempted. Fourth, there are territorial jurisdictions. And fifth, there is an observance of international law. And these are the inherent limitations that are not affected by the changes in the provisions of the Constitution. Now let's proceed to the second category of limitations of taxation, which is the constitutional limitations. Constitutional limitations of taxations are those limitations provided in the Constitution. First is we have the observance of due process of law. Under this, we have the Article 3, Section 14.1 that states that no person shall be held to answer for a criminal offense without due process of law. Second is we have the equal protection of the law. Under this, we have Article 3, Section 1 that says that no person shall be deprived of life, liberty, or property without due process of law, nor shall any person be denied the equal protection of the law. So next is the third one. We have the uniformity and equity rule. Under this, we have Article 6, Section 28.1 says that the rule of taxation must be uniform and equitable enough and likewise progressive. Fourth is we have non-imprisonment for non-payment of poll tax. Under this, we have Article 3, Section 20 says that no person shall be imprisoned for a debt or non-payment of a poll tax. When we speak of poll tax or personal or capitation tax, this is a tax of a fixed amount per person levied on adults and often linked to the right to vote. Last, or the fifth one, is we have no appropriation for religious purposes. Under this limitation, it consists of two articles. So first is we have Article 6, Section 29.2, and the second one is Article 6, Section 28.3. Now, let's talk first about the first Article 6, Section 29.2. So in this article, it says that no public money or property shall be appropriated, applied, paid, or employed directly or indirectly for the use, benefit, or support of any sect, church, denomination, sectarian institution, or system of religion, or of any priest, preacher, minister, or dignitary as such, except when such priest, preacher, minister, or dignitary is assigned to the armed forces, or to any penal institution or government orphanage or leprosarium. And the second article is we have Article 6, Section 28.3 says that charitable institutions, churches, and personages or convents appertinent thereto, mosque, non-profit cemeteries, and or lands, buildings, and improvements actually, directly, and exclusively used for religious, charitable, or educational purposes shall be exempt from taxation. Let's move on to double taxation. Double taxation refers to an instance when an income, a property, or a transaction was imposed with the two or more taxes by taxing authority in the same year. So usually this occurs when an object of taxation was levied with two or more taxes from a single tax basis. So in the double taxation, from the word double, it means there are two taxation. So we have first is direct duplicate and second is indirect duplicate. So when we speak of direct duplicate, this same income taxed twice. So for further understanding, direct duplicate is the income tax being paid twice on the same source of income. So second is we have indirect duplicate. So in indirect duplicate, taxes are paid by the same individual or corporation based on two or more different taxing bases. Let's proceed to the government taxing itself. The government may be taxed if it derives profit in the exercises of its proprietary capacity and not when the revenues were gained from the exercise of governmental responsibility. So it means that the government shall function in its governmental capacity only when it serves the people and delivers basic services to them. And another thing also is if the government acts in its proprietary capacity only when it functions for profit. And now let's have the last content of the discussion of this video, which is the avoiding taxation. Under this, we have other concepts related to taxation in terms of avoidance or non-payment. So first is we have shifting. So shifting, this is the passing on of the tax burden from one person to another. So let's take for an instance the general sales taxes. So these are paid by business firms, but most of the cost of the tax is actually passed on to those who buy the goods that are being taxed. So in other words, the tax is shifted from the business to the consumer. So next is we have the capitalization. This is done by reduce the price of a taxable product or service to lower the tax that will be imposed on its consumption. So this usually can result where there is forward shifting, backward shifting, or even no shifting. So third is we have tax avoidance. This refers to the availing by the taxpayer of legally allowable means, or shall we say the tax minimization. In tax avoidance, Manggod, this is completely legal because you're making use of your tax benefits just to lower taxes for your small businesses. Fourth is tax evasion, that refers to the use by the taxpayer of illegal means and escaping, defeating, or lessening the tax due, or shall we say the tax dodging. In tax evasion, this was called as, or this is was termed an illegal evasion of taxes because it often entails, Manggod, sa mga taxpayers that deliberately misrepresenting the true state of their affairs to the tax authorities to reduce their tax liability, wherein it includes the dishonest tax reporting, such as kanang declaring less income, profits, or even gaining than the amounts actually earned or overstating deductions. And last is we have the tax exemption, which is the bestowal of immunity by the taxing authority on a taxpayer from the obligation of tax payment. So it means the tax exemption is the right to exclude all or some income from taxation, especially by federal or state governments. So mostly taxpayers were entitled to various exemptions because it is, or to reduce their taxable income, and certain individuals and organizations are completely exempted from paying taxes. So tax exemption usually works when the taxpayers experience it. And I think that would be all for the discussion for this video, and I hope you learned something from it. Thank you!